The ninth best performer year to date is SVB Financial. Don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB is the old Silicon Valley Bank. Recently bought one of our favorite research firms, Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year, they could come back. Yeah, some of them come back here with the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation.
Good old Jim Cramer giving us some bad advice again just last month, telling people to invest in SVB, Silicon Valley Bank. Of course, regulators just shuttered SVB yesterday, Friday, and seized its deposits in the largest U.S. banking failure since the 2008 financial crisis. And it was the second largest ever. So, let's hear more about this video from last month that Jim Cramer now regrets.
Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have to remember that a stock that falls 66%, like SVB Financial did last year, it takes it a lot more to recover. After losing two-thirds of your value, you need a 200% gain to get back to even. This is arithmetic. Some people call it geometry. So you could argue SVB's nearly 40% rally this year is barely a drop in the bucket. And that's how I want you to think it. I think it's also a good example of why these bounce-back moves might be far from over. These stocks could have more room to run, especially if you think they were driven down to artificially low levels by tax loss selling, artificial dumping.
Yeah, this really is an earthquake, especially for the tech community. Silicon Valley Bank dropped by 60% yesterday alone. We just learned today that California regulators have shut this lender down.
SVB Bank has now failed. The FDIC takes over and has appointed a receiver. You're looking at the amount of deposits that are over the insurance limit, which is $250,000, is now undetermined. It is the first insured institution to fail so far this year.
I guess none of this should really surprise us because this is the guy that predicted right before the 2020 election that Biden's tax policies would be good for the stock market. Check this out.
Honestly, I've been operating under the assumption that the market might take a hit if Biden wins. Because what? He wants to raise the corporate tax. He wants to raise the capital gains tax. Wants to raise the tax on rich people. They own stocks. Hey, look, even if you think that's good policy, it seems like, I don't know, how about an obvious negative for the market? Given that Biden's been getting some incredible poll numbers for the last few weeks, a Democratic sweep has become a real possibility. And I know many of you assume that's bad for stocks. That is certainly what I thought. Or at least it's what I thought before my big club call revelation.
I got a $100 check from my grandma, and my dad said I need to put it in the bank so it can grow over the years.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.